Mr. Hill, the sponsor of the legislation, for 5 minutes.
Thanks, Mr. Chairman. Appreciate you bringing 4620 to the table today, which provides limited relief from Dodd-Frank's risk retention requirements that are set to take effect in December of this year. And those are affecting prudently underwritten, low-risk commercial real estate loans. Despite the last couple of years of the regulators making efforts to write one set of rules encompassing all different securitized asset types, the rule in its current form does not properly treat commercial mortgage-backed securities, despite feedback, evidence, back testing, including during the financial crisis provided by the industry during this two-year rulemaking process. And as I noted when we had our hearing last week, while more than 85% of residential mortgage-backed securities would qualify for an exemption from their risk retention rules, only 3 to 8% of commercial mortgage-backed securities would currently qualify under the rules proposed by the regulators. That doesn't really make any sense to me, given that it was really the residential market, the housing policy that was at the heart of the crisis, not commercial real estate. Let's also not forget that residential mortgages are underwritten based on borrower characteristics, whereas commercial loans are underwritten based on the asset quality itself and the ability to repay from those asset cash flows. In fact, CMBS loans performed well throughout the financial crisis. In looking at back-tested data from 1997 to 2013, cumulative loss rates for conduit CMBS have been 2.79%, only 25 basis points for single asset borrower transactions. The bill as proposed provides modest relief by exempting single asset, single borrower transaction from the risk retention rules. These loans are comprised of single large mortgage on one asset, like a shopping mall or an office complex, which single lenders typically do not finance. These transactions are transparent, and as I've previously noted, the cumulative loss for the past 20 years or so has only been 25 basis points for these type of properties. The bill also sets out reasonable qualified parameters for the market industry generally. And there are a number of parameters, 10 or so or more, that commercial mortgages have to qualify under in order to meet the risk parameters of a qualified commercial mortgage. This bill touches on just a handful. For example, I've heard some comments that these provisions would exempt interest-only loans, which in truth really are not inherently more risky. In fact, they are in some instances less risky. H.R. 4620 simply makes the parameters reflect the market conditions, not somebody's idea of the market conditions, but actually what's going on out in the conduit market for CMBS product. They still have to meet all the other parameters to be a qualified mortgage and get the exemption. These proposals will not exacerbate expected losses while marginally allowing a few more CMBS issues to qualify under the exemption. This rule is not modified before it goes into effect in December. If it's not modified, borrowers across the country could experience significant reductions in access to credit and unwarranted increases in borrowing costs, reduced liquidity, and could impair economic development and job creation. And I think our members on the committee have seen this distributed to them by state, but I was looking at Arkansas. There are 275 commercial loans covering 360 properties across our state, and they are going to be impacted by this rule. And I would argue that people in secondary markets or tertiary markets like Little Rock or Northwest Arkansas, they don't get access to as much credit from the life insurance industries that typically focus on big urban areas, NFL-type markets for commercial real estate development. So CMBS market is particularly important to tertiary and secondary markets. We should be encouraging capital flows into commercial investment-grade real estate, and in my view, this bill will make a modest contribution to that effort. And with that, Mr. Chairman, I'll yield back and listen to the comments of the committee.
Gentleman yields back.